Hey, hello, welcome to my massive audience of zero. That's okay, this is my own thing. This is what I do. Uh, it has already helped me massively in my trading. Anyway, my name's Frank. This is Premarket Wake Up. Until I get a bunch of viewers, which might not ever happen, I'm going to do this when I feel like it. It's considered a video diary of sorts. Anyway, my community is called No More Paper Trading. I just wanted to build a community as organically as possible that would not serve to suck money out of starting traders. No More Paper will never become that. I will never sell it. I will never monetize it. All right, enough of that. Let's get to it. Okay, as I go live, we just had some data come out. Let's take a look at it. Why don't they continue in jobless claims? So a lot of this is for September. Might not hold a lot of weight, but continuous jobless claims came in a little bit. I don't know what the consensus was. Initial jobless claims came in lower. I don't know. You could see that as bad for markets because people were hoping that high unemployment would spur the Fed to cut rates. Now they don't have an excuse. Now we all know that the Fed it serves the elite. It serves, right now in this time period, big tech. The proof of that is that the pullback of last week was recovered by Fed news of, oh, maybe we'll cut now. And it's not a coincidence that it happened when we were really close to a liquidation meltdown. But they can sell it to the public as, oh, we're cutting because, the unemployment seems a little high. But if it's not, how the heck are you going to sell a rate cut to the public? I know U.S. president wants it. I don't really know why he wants it. I don't know. It seems like there's no true capitalists anymore that really understand the basic nature of capitalism. And it's not, well, yeah, property rights is one of them. But I'd say the most important part of capitalism is competition. And when markets pull back, when markets crash, which crash isn't even the right term. Even the worst crash in history was not that terrible. If you look at the charts, things recovered in due time. I would argue that a crash is like, imagine you crash a car and it's totaled. The stock market's never been totaled. Anyway, you need these crashes to bring competition, to weed out the companies that don't really make profit, to weed out the crap stocks that are just all valuations and not earnings. But with the Fed doing everything it can to uphold this bubble, which I understand the reasons. Not only is it good for all their rich buddies and for their own investments, but a lot of Americans' pensions funds are now highly invested into this bubble as well. I think it's going to be a controlled burn. And this is my just off the cuff estimate, prediction, whatever you want to call it, is that right now, this week, we have been, Monday, Tuesday, Wednesday, we've been insane gains in the market, but on very low volume. They're using the low liquidity going into the holiday, the money makers, the money market makers. They're pumping the price up for a good position for fund managers to start selling again. I mean, that's the explanation behind certain chart patterns and why they form. The way price is manipulated. That's my estimate, is that they're doing that right now to sell slower, because a very, very, very quick crash is only good for the short sellers. At least that's my hope, that we still have people that believe in real value. That would be why they slowly leaked the idea of it into markets. And why they pump brakes on it sometimes. And it's a bit optimistic that this behemoth of a market can be manipulated. I don't know. We'll see. Other than that, these are September numbers, I'm pretty sure. U.S. Department of Labor. Okay, so maybe it's not initial jobless claims. This might be accurate for now. All right, what else is going on? Let's take a look at the news, and then I'll get over to the charts a little bit. I'm going to try to make this quick. I have far too many things to do. I hate holidays. You know you're in the right career if you can't wait for a holiday to be over to get back to work. I get like that every weekend. In fact, I work through the weekend on other things to get to Monday morning faster. Well, Sunday night really is when I start. If you dread trading every day, maybe that's not for you. Anyway, let's take a look at the headlines. I saw a few that made me laugh, that were kind of pathetic. This is the big one. If you remember, well, you don't remember because nobody watched it, but last week I think it was, I pointed out this article, the algorithm that detected a 610 billion fraud, how machine intelligence exposed the AI industry's circular financing scheme. And this was an idea, I don't know how true it is now, that the pullback after NVIDIA was due to the algorithms figuring out problems in NVIDIA's earnings report. And they figured it out quickly and suddenly, which caused the quick price meltdown, which was last Thursday. But it also exposes the circular financing in numbers. They can hide it as much as they want, but certain numbers are going to come to the front. Anyway, I said then that this article would become big news. It was kind of true. It became very noticed. NVIDIA noticed it, that's for sure, because here in this article, they sent a memo to Wall Street analysts saying basically, nuh-uh. That's it. They're just, when have you ever seen that a company does this type of crap? We're living in a clown world. We really are. And that's what it boils down to. NVIDIA saying, nuh-uh. Let's read through this. It's fact is stranger than fiction. We'll just say that. NVIDIA sent a memo to Wall Street analysts over the weekend arguing that it is not engaged in vendor financing. Well, you can obviously see they are. They come out and say they are. A controversial practice in which suppliers invest in or extend loans to their own customers. Famed short sellers Jim Chanos, I think that's how you say Chanos, and Michael Berry aren't so sure. NVIDIA wrote a 7-page document, first reported by Barron's on Tuesday morning, rebuffing claims. Oh, that's kind of convenient. That Tuesday morning is when the real sell-off happened very quick in NVIDIA. Rebuffing claims that it invests in its own customers to inflate its revenue. The memo was written in response to a newsletter, and that's the link that takes us to the article I pointed out, from a little-known Substack author last week claiming that the $5 trillion AI chipmaker is engaged in a circular financing scheme. Now, he wasn't the first to point this out. This was pointed out quite a while ago, and by big names, too, using vendor financing to boost sales, drawing parallels between NVIDIA and famous .com-era accounting frauds committed by Enron and Lucent. Enron is notorious for manipulating its accounting and using off-balance sheet debt to hide losses in its broadband business during the internet boom. Internet infrastructure provider Lucent, meanwhile, is best known for aggressively investing in and extending loans to many of its loss-making telecom customers, who then used the funds to buy Lucent equipment that they couldn't have otherwise afforded. I mean, Lucent is much closer to what NVIDIA is doing than I would say Enron. But it's not, they're investing in, they're not extending loans. Same thing. When the dot-com bubble burst and telecom startups couldn't pay back Lucent, the company had to write down revenue tied to those transactions and lost billions of dollars. See, Jensen Huang's big fear is that the fraud will come to the forefront. So as long as everyone's making money, nobody's going to be picking apart his books. No federal agencies are going to say, start knocking on the door saying, what are you doing? Because everybody's riding high. But as soon as it stops making everybody money, that's when people want to start asking questions. Chanos, who is famous for predicting the fall of Enron, thinks the comparison between NVIDIA and Lucent bears weight. They are, NVIDIA, putting money into money-losing companies in order for those companies to order their chips, Chanos told Yahoo Finance in an interview. NVIDIA has invested heavily in its own customers, from ChatGPT developer OpenAI to Elon Musk to a slew of AI cloud firms, including CoreWeave and Nebius? I've never heard of this one. And those investments have raised eyebrows on Wall Street. NVIDIA does not resemble... Okay, this is NVIDIA's argument now. I would like to read the whole memo, but I have other things to do. NVIDIA does not resemble historical accounting frauds because NVIDIA's underlying business is economically sound. Again, nuh-uh. That's not an argument. Our reporting is complete and transparent. Yeah, that's how we know that you're doing this. And we care about our reputation for integrity. Again, anytime a company says stuff like that, just ignore it. They care about one thing. And I just wish a company would just admit that. It's not terrible. It's not the end of the world. We all know it's true, so stop telling people that you care about integrity or what's the ESG and all that crap, or the environment. You care about your stock price, your shareholder price. That's fine. That's good. That's the law. It brings everyone value. And I don't understand why they gotta pretend to play nice. Anyway, unlike Lucent, NVIDIA does not rely on vendor financing arrangements to grow revenue. But you do. The company continued. NVIDIA noted that in typical vendor financing agreements, customers pay back suppliers over years. So if you're investing a lot of money into them to buy stuff from you, how is that not circular financing? Meanwhile, the chipmaker said its customers pay the company within 53 days after purchasing its chips. No, that's the average. That's a lie. Those 53 days, that's an average. There's a lot of real fancy financing, I bet there is, that can hide that a lot of these companies are not able to pay it back. How the heck can a company like OpenAI pay NVIDIA trillions of dollars or billions of dollars when it loses hundreds of billions of dollars? Burry, the big short investor who predicted the collapse, I'm sick of hearing that. I guarantee you there's a lot bigger names in this short right now. Saying NVIDIA is one of multiple companies in the AI market with suspicious revenue recognition due to investments in its customers. On top of vendor financing, Shanos views the entrance of debt in the AI market as another cause of concern for investors. Like Enron, Shanos said, some of NVIDIA's customers, such as Meta and XAI, are using off-balance sheet debt to finance their purchases of chips. Off-balance sheet debt. Wow. Others, such as Anthropic, are using traditional debt funding. I'd like to know more about this off-balance sheet debt. How do they hide it? Putting lots of credit and really arcane financial structures on top of these money-losing entities is, I think, the real Achilles heel of the AI tech market. Shanos told Yahoo Finance on Tuesday. See, this is why I just keep thinking that this pump up in markets is fake. It's a way that the big fund managers are going to be able to sell into the market better. And I should have noticed that, and I should have been more strategic with my trades. Let's continue. But while accounting could play a role in fueling the AI bubble by artificially inflating demand for the tech, the two short sellers argue that the bigger problem is simpler. The biggest tech companies are spending billions in a rush to build AI data centers ahead of demand. Again, you go back to the dot-com bubble. The demand was there, and it still caused a bubble. I would say the demand is at half, if not a quarter, of what it was for the internet. It's just not there yet. Again, you're seeing a lot of the result of using AI causing major problems. I know the evidence isn't there yet, or maybe it is, but I guarantee you the reason the internet keeps going out randomly, I'm talking about the huge swaths of the internet blinking out. Everyone points to the problem being centralizing. So you centralize, so if the whole internet's controlled by one company, that's one point of failure. That is a problem. But I didn't see this many blackouts 5 years ago. I think a lot of it's now because these companies pushing developers to use AI. And the mistakes are getting embedded in code to the point where, glitches are just going to be a huge part of life. I don't know. Burry claimed this week in a newsletter from his new Substack, Cassandra Unchained, that the AI market, like the dot-com era, is seeing catastrophically overbuilt supply and nowhere near enough demand. In other words, too many chips, servers, and data centers without enough underlying demand for AI applications used by businesses and consumers. I would maybe argue that businesses want it a bit more than consumers. Consumers don't want it. It's being forced upon them. And you could say AI is really, really good at tracking people. But that's a very limited market. And then that kind of puts a lot of weight in the markets on consumer spending. Because you can only sell consumer data for a high price when consumers are spending a lot. I don't care about the spending habits of someone when they're broke. For its part, NVIDIA sees the market accelerating, saying demand for its AI chips is off the charts in its latest earnings report and arguing against the idea of a market bubble. The company argued Tuesday that it's a generation ahead of rivals, even as rising AI chip competition from Google sent the chipmaker's stock lower. I think that's also bigger news than people realize, or maybe they are realizing it, but a lot of the strength in NVIDIA so far has been, it's the only one, it's the only one, it's the only one. As other ways come in, other chip makers figure it out, which it won't take long, they're going to fall back in value. I don't think it'll be huge. I mean, let's look at Cisco. They've been around forever. All right, I got a good chart here. This is a weekly chart for Cisco, which was around for the dot-com bubble. As you can see, insane growth at the beginning of the bubble. The bubble burst, and you're talking a retracement from $50 a share to $8 a share. I don't know. Could that happen to NVIDIA? And then it took, look at how many years it took to return to that same $50 a share. And I don't know if Cisco did dividends ever. So if you were holding the bag back in 2000, it took till 2022, 22 years to return. I don't see that happening with NVIDIA. I think they are ahead in some ways. But I could see them falling like half of the ratio that Cisco did. So if Cisco went from 50 to 8, I could see NVIDIA going I could see them going back to like $100 a share, 90, 80, 90, 100 a share. Before continuing to go up and maybe 2032, 2033. I mean, that's the thing, though. You can call it, and it's probably going to be true to some extent. But timing is everything. Can you time it enough to make money off of it? That is the problem. All right, back to the article. Again, NVIDIA's argument that demand for AI chips is off the charts. Let's say it is. Let's say we'll take it at their word, which there's numbers that have come out that argue that it's not quite true. But again, that could just be a lag in the accounting data. But let's take them at their word. Again, that demand is coming from companies that need to make a profit to keep buying these chips. And it doesn't rule out the circular financing. So if these companies buying from them, it's plain to see. But maybe the markets are so rotten that we will only head up from now on until forever. Maybe the lesson they learned from all the past bubbles is how to artificially create a stock market that never goes down. At least down in the ratios that it used to. All right, let's finish this article. But Shanos also thinks the rapidly accelerating AI build-out ahead of demand is cause for concern. If it turns out that we don't quite need all the data center or chip capacity, which we won't, we thought we will in 2027, 28, you could see orders begin to be canceled, and that's a big risk that not a lot of people are talking about. I think it might come sooner. I think 26. Let's view the comments. You don't understand NVIDIA. That's the same thing all the time. You don't get AI. You don't understand the bubble. Or they won't say bubble. You don't understand them. If I read correctly, China thinks we'll find out in 27 or 28 whether the AI infrastructure is overbuilt. It's a long time to maintain a short position. That is true, yeah. But as you know with markets, they predict years ahead. So the orders might stop. You might hit a bottom in 27, 28, but the trip to the bottom might start in early 26. I think Shanos is just following Barry's lead. Jim Chanos lost billions of dollars on his Tesla short position, leading to a significant drop in his fund's assets under management. His fund went from an estimated $6 billion in 2008 down to less than $200 million. He desperately needs a possible win. I don't know if is that true? We don't know. But funds under management, that changes with people taking profits and stuff. Okay, so this is an interesting argument. I'm not going to dismiss this. Short sellers often focus on companies like NVIDIA because of the company's size and its central role in the AI ecosystem. I mean, this is kind of why I said earlier that I don't think NVIDIA is going to pull back as much as Cisco did in the dot-com bubble. But again, a lot of the companies then that crashed, like AT&T, let's see if AT&T did that and if they crashed. What is AT8? Is it at that? I can't find the stock right now. It doesn't matter. Short sellers often focus blah, 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 blah. Any negative narrative can pressure the stock, but it's important to recognize that today's AI cycle is fundamentally different than the dot-com era. Yes, they're all different. The housing market crash was different than the AI bubble. A bubble is still a bubble. The dot-com bubble was fueled by a flood of new, unproven startups, many without real revenue. What's CoreWeave? What's OpenAI? This is somewhat true, but it's not enough to keep the bubble going. In contrast, AI adoption is being driven by established industries. Yeah, but it's not being adopted by consumers. That is a huge red flag. Industries are trying to get ahead, just like they did during COVID when there was a huge hiring boom after the initial mess was over. And they got way ahead and then had to fire tons of people. And a lot of the times, the only reason they just kept hiring was because Facebook was doing it. So Facebook's hiring a lot of people. We got to do it too. A lot of this AI stuff is, well, they're doing it. If we don't do it, we risk falling behind. And so it becomes better to spend a few $1 billion, hundreds of billions of dollars, and lose it than to not be a player in the first place. In contrast, cloud providers, automotive, healthcare, manufacturing, finance, and more, using AI to improve efficiency and productivity. Yeah, but I think a lot of numbers will come out. It's not quite there yet. This shift requires large-scale computing infrastructure where NVIDIA remains the dominant supplier. Not anymore. This reflects a long-term transformation of existing enterprise operations, not a speculative rush of new entrants. That's why many analysts view the current AI investment cycle as structural rather than a repeat of the dot-com bubble. Well, nothing's ever a repeat. Spoken like a true believer. I mean, you don't have to be passive aggressive. Have you investigated the off-book financing described in the article? Do you not believe that NVIDIA is making large investments in companies that are then buying its chips? Do you not think it's possible that demand will not match the supply? Not saying any of it is true, but is it possible? Right, which is again why I don't think we'll have a huge crash until you factor in the massive amounts of debt. But then with a huge amount of debt comes a lot of players in the game who don't want it to happen, blah, 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 blah. All right, I've spoken enough about this. Let's look at another article, then I want to look at price, and then I want to get working. I have no time today. All right, this is a strange article, giving thanks for bad economic news. I bet you this is going to be about how bad news means good because it means the Fed's going to cut rates. What matters in U.S. and global markets today? Weaker than expected U.S. economic data has upped bets for a Federal Reserve interest rate cut next month, giving global equities a boost as we move into the Thanksgiving holiday. And while Americans are prepping turkeys or heading to the airport, Britain will be chewing over the details of its much debated budget, which Rachel Reeves, the UK finance minister, is releasing today. Well, that's going to be a shit show. For more on the UK budget, check out ROI editor Large Mike Dolan's latest column on why a rallying US bond market may soften any negative market reaction over in gilts. Over in gilts. Never heard that. Also, check out Mike on a blah, 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 blah. That's it. Today's Market Minute. U.S.-backed 28-point peace plan to end the war in Ukraine, which became public last week, drew from a Russian-authored paper submitted to the Trump administration in October, according to 3 sources familiar with the matter. Well, yeah, you got to hear from both sides if you're going to negotiate peace. I mean, I wish we'd just... I don't know. I don't know enough about it. British Finance Minister Rachel Reeves is likely to announce tens of billions of pounds of new tax increases on Wednesday. That's going to kill the UK. Well, that could be good for US markets because it could mean a lot of divestment from LSE. But at this point, the London Stock Exchange is nowhere near what it used to be. Puts her credibility on the line both with bond investors and with lawmakers demanding more welfare spending. I wonder what that means for US markets. US tech companies' share of S&P 500 earnings have been slipping even as their contribution to the index's market value remains near multi-decade highs, raising concerns that their prices are further removed from underlying profit trends. Okay. So that goes with last week and the week before's narrative that the market was broadening out, which that's why you see upticks in the Russell and the Dow. But I think my crystal ball, let me get my crystal ball out. I think this is a setup, like I said earlier. And the news cycle is going to go next week. You're going to start hearing whispers that maybe the Fed isn't going to cut. And then what else is going to happen? I don't know. I think that would be enough. All right, Europe's gas market is far calmer today after years of turmoil that saw the region swap Russian supplies for liquefied natural gas imports, a strategy that is unlikely to change even if Donald Trump brokers a peace deal in Ukraine. I don't know. I think people will go back to buying from Russia. It might take a while, but they will. Reeves, who faced a make-or-break budget, should view her labor again about Reeves. Given thanks for bad news, U.S. stocks rose for a third consecutive day on Tuesday after data showed softer than expected retail sales and weakening consumer confidence. So we're just loading crap on top of crap. Yeah, I don't know how a quarter basis point can make that big of a difference. I don't think the liquidity is enough to save this market. I really don't. Economists polled by Reuters had forecast retail sales would increase by 0.5%. The data was a bit stale as the report was delayed by the 43-day U.S. government shutdown, but negative vibes were also evident in the Conference Board's Consumer Confidence Index, which dropped to 88.7, the lowest level since April. Take these soft economic data points, combine them with the recent rise in unemployment rate to 4.4%, add dovish statements from multiple Fed officials, and you appear to have the makings of a December rate cut. I don't know. Fed funds futures are pricing in a roughly... So someone else I watched, I don't remember exactly all that they said because I don't really trust them either, but I take into account what they said is that the rate cut isn't the real narrative. And I've been trying to figure out what is. What's keeping markets afloat right now? Because the rate cut is just one tiny tool used to increase liquidity. I don't know. I don't know where to discuss that. You know, if my community had a lot of really good traders in it, we could discuss that and maybe find an answer. Or maybe just come back to rate cuts are it. All right, that's enough news. I don't care anymore. It's all just so tiring. Let's take a look at NQ. Yeah, we're up in the overnight. I had some decent trades, but I think Interactive Brokers just increased my margin for no reason. I'm really considering another broker. Or maybe the grass isn't greener on the other side. I don't know. But they constantly send me notifications that are wrong. Because like everything else, they're using AI again lately to do everything. I'll get notifications that my positions are going to be liquidated for positions I don't even hold. So then that makes me think, well, did I really close the position? Am I missing something? If they can mess up like that, maybe they can mess up by showing me that I didn't really close the position. I've had that happen before, where I've hit and I don't know if it was my fault or not. Probably was, but glitches happen where I go to sell a position and it only sells 5 of the 6 contracts, even though it shows it sold all 6. I've had that happen before. All right, ran over. Let's take a look at the daily. That's where it shows something somewhat significant. If you look at the most recent volume levels, you'll see that this is kind of what makes me also think that this is a ploy, this increase for better positions. I should have, whatever. The decreasing volume as we head higher. I mean, that's been the pattern since the end of October. The days of selling have a higher volume than the days of buying. And I understand these 2 days have a higher volume than the rise back in on the 10th after that crash on the 7th. Not crash, whatever you want to call it, you know what I mean. We are back above the neckline now, but we're also at the line of the right shoulder. Strength, I don't know, the RSI is hard to use on a daily chart, for me anyway. But we'll see. Also, the volatility on these days of selling is crazy. And the balance of sellers is also crazy. We'll see. VIX is, let's go to the VIX. Let's just look at gold quick. Gold's kind of flat in the overnight. Oil's flat in the overnight. Bitcoin's kind of going down. Slightly down in the overnight. You see a crash in Bitcoin, you'll see a crash in NASDAQ. All right, let's check out VIX. So this is VIX futures. Had a bit of an uptick, but now we're trending down. Really nothing to see here. We are getting quite low in the VIX. Very low. We're now under 20. Easily under 20. And VIX volatility is way down now. Yeah, I think after, I don't know. I don't know if we'll get a Santa rally this year. I am right now considering leaving my positions at the small profit they have right now to get in later at a better position. As a mostly day trader, the anxiety is rough. But yeah, let's check dollar quick. Dollar saw a recent rise at that news. All right, that's all I got. Good luck. Goodbye.